Good morning. This is DXY. DXY is the dollar index. I did this analysis yesterday. Today is on Tuesday, very early in the morning. I did the analysis on Monday morning, right? And I saw that from the higher time frame, we are in a bullish run, right? But at the moment, we are doing the bullback, right? Or the retracement. And I also checked my Forex Factory, and I saw that the whole of this week we don't have such strong news on the dollar, right? Apart from some impact news on card and some other pairs, right? So from the dollar, we are safe for the week. So the time frame, as I said, it was bullish. So from yesterday, and the 4 hours is also bullish, right? It is bullish, so you can see. And this was the last break of structure, my swing low and my swing high, right? So typically we are in a bullish run, but I said I'm not interested in taking any swing buys until price come down to this level, right? Unless price come to my discount, let's measure this range, swing low to the swing high. Right, we can see that price is playing around the 50%, which is the equilibrium. So typically you want to buy when the price is at the discount, and discount is below the 50%. That's 78, around this level of 78, around this level, right? This line or this point. And then we can say now, okay, we can buy and continue after the continuation to the upside to take this swing high and create that break of structure. But at the moment we are doing the bullback, so my focus is on this retracement as it is coming down to this level, right? So yesterday I saw that I had this internal break of structure, right? And previously price reacted from this supply, right? Price reacted from this supply, you can see right there, and it went to the downside and gave us another internal break of structure. Right, this internal break of structure gave us our new dealing range on this our internal structures. Alright, as long as we are in the pullback or retracement, our focus is on the internal structures until we reach down to our discount. Then we can start now dealing with external structures. So this was the most recent break of structure, and this was my most recent swing high and my swing low. So what do I want to see? I want to see price come to my premium so that I can continue this table back selling down, right? We are doing what we call counter trend, right? So I wanna continue counter trending to the downside until when we are ready to have that continuation move to the upside. So when I put my dealing range, not my dealing range, but my Fibonacci, you can see that price is also a little bit above the 50%, but it's not entirely up to my level of premium. Alright, I want to see it deeply in premium. Then you can sell it confidently to take this previous low or this possible break of structure to the downside. Alright, and another thing, yesterday when I was doing this analysis, price was somewhere this level, right? Somewhere price was this point, right? That's where price was, and I say that I want to see it take our previous day high. That's our Friday high, right? And our Friday high was somewhere here. This was our Friday high that I wanted to see price take it out and maybe have some reaction from this medium supply zone, right? But my ultimate target, like where I want to see price come to, so that I can have that confidence to take the sell is this extreme supply zone. Right? Why? Because it is the extreme premium level, that's first, and second, it is the one that resulted to this breakout structure. Right? So from this supply price may work out or it may not work out, but I see this high as an inducement. Right? Price may decide to induce people that are trying to sell from this level and then come tap to our extreme supply zone, and then we can have that movement to the downside. Right? We have a difference between inducement and liquidity. Inducement is what brings liquidity in the market. Inducement is what makes you to enter buy or sell. That activity of you entering a buy or a sell, we have generated liquidity to the market. So unless there is inducement, there is no liquidity, right? Unless you have induced to take action, then you have not entered any orders in the market, and you not entering any orders, that means there is no liquidity. All right. So typically I wanna see price take out this high, right? Tap to my supply zone, then we can have that smooth run to the downside, right? So from the 1 hour, it's quite clear, right? So this was the previous day high. That was the Friday high, and I was watching it when price was almost here. I was printing to the downside from this candlestick. That's when I was doing the analysis. They say that I want to see price take this previous day high and maybe have some reaction from this supply zone, but my confidence level is at this more extreme supply zone. Right? I'm not saying that price may not react from this zone. It may or it may not. Right? But if it comes here, I will not have that doubt of it may or it may not. I will just take my sell and wait to see what price does. But from this level, I'm very skeptical. I want to see it come to this most extreme supply zone. So you can see I have some buys here, right? That I was targeting this supply zone. And the reason why I took time is simple. I had this breakout structure until 1 hour, alright? Breakout structure right there. Let me delete this so that I can show what I saw and why I took that buy. I had this breakout structure, right? And I had my previous day high that was in conference with the equal highs. Alright, we can see these highs are equal, so I named it a previous day high, but I knew it is a previous day together with equal highs, and the price tends to take out equal highs and previous day high, right? For me, I've come to structure myself, and when I take a trade, I wanna see price take give me some liquidity sweep. For me to identify those liquidity sweep, I want to see price take my previous day high or equal highs or equal lows, or I want to see price take the high or the high. Alright, I want to see price go up above an old high or below an old low. And then from there I can take my trade with confidence. Alright, so this typically is my hold high here. I want to see price take the hold high and tap to this, then I can sell. So when I was coming, I saw this breakout structure. My previous day high was price right there. Price was somewhere here. Then I said this is my demand zone, right? That led to this breakout structure. And then I was expecting some buyers from here to take this previous day high and maybe tap to this supply zone. And the 15 minutes now what gave me the confidence, right? From 1 hour I was just having the overview, right? Or just having that idea like what price might do or what it may do, but I was not confident to take the sell. But from the 15 minutes time frame, you can also see that we have this breakout structure, felt clear, and this was our demand, felt clear, right? And price did not tap it before. It reacted from this zone, but never did a proper mitigation of the demand zone. Price came, tapped it at the first time. This was, and it took the low of Asia right there, and something very significant happened here. Let me show you. Something very significant. Right, you can see. Right, have a look at this. Have a clear look at this. What do you see? Price did something very significant. It took this low, right? You can have relative equal lows, right? These two equal lows. Price took it after it had taken the low of Asia, right? What will people do once they have seen the low of Asia been taken out and price is doing some buys? To start entering the buy, targeting the high of Asia, forgetting that we have some demand zone that's untapped below their stop loss. They'll put it their stop loss somewhere there, forgetting that we have a demand zone that's untapped below them, right? We have a demand zone that's untapped, right? People are buying, they saw like, oh, price has taken the low of Asia, let's buy to the high of Asia. But me, I did not do that. I did not do that. I waited. I fucking waited. Right? Why did I wait? I waited because this demand zone was not tapped. If it took this and tap it very significant and give me some clear liquidity sweep, then I will take it. Right? But once I saw that price has left this demand zone, I knew that this is a possible inducement. Like the clearance of the Asian low is the inducement that is going to tell people like, oh, I have cleared the low of Asia, let's buy, and people will buy. That activity of buying, they are generating liquidity to the market. That you wanna see the smart man sweep as they swept right there, and now the rightful move is coming in. This is now our market structure shift, right? Market structure shift, and I took the buy from this proportional block, or you can call it another block or a demand zone, whichever name you give it, as long as you understand the story. There's no problem. These names were given by a person, so a name does not have any significance of you taking the right. You can call it your name. In fact, you can say this on Monday, I want to take my trade from this on Monday and target my previous day high on my this supply zone. My stop loss was just a little bit below there, right? And that's what I did, right? That's what I did. I did something like 1 2 3. The 1 2 3 1 2 3 point something right there, right? So that's how I was able to get this move. Simple process, discipline, and knowing the narrative of the market. The most important thing is not you taking the trade from another block or a fair value gap or a demand zone or whatever you wanna take your trade from. The most important thing is understanding the story, the narrative that the market is telling you at that time. What is the market trying to do? What's the market trying to achieve? Right? Once you understand the story, these things they become more clearer and more easier. You just find yourself filtering good trades and bad trades once you understand the story of the market. So that's how I was able to get this move. But typically I wanna see price come to this zone, then I can sell. That's my setup. So this previous day I created the pre-core structure. Right? This is the pre-core structure. And then we are having a retracement, right? Once we have a pre-core structure, you wanna see price do a retracement or a pullback. And maybe price may react from this zone to continue the movement. Let me show you. Price may react from that zone. I stop loss yesterday. continue to retracement, take out the inducement that we have seen and tap to our supply zone. Alright, something like that. Guys may do this retracement, take the low of Asia, tap to this order block. And then you can have that last push to the upside to our supply zone. And then from our supply zone, we can have something like this. That will tell us now we are continuing to the downside, targeting our higher time frame area of interest in order for us to continue with that swing buys. Alright, today being Tuesday, and I want to see price give us the high of the week, right? Maybe today or tomorrow at the London session. I want to see this market give us the high of the week, right? I want to see come here, go up to this level, give us the high of the week, and then for the rest of the week we will expand to the downside with the overall direction, right? So that's it. Simple steps, same discipline, and you are always just one trade away